Well, hello there. This is Slot Plinsky Homes. I hope you're having a wonderful day today. I'm so excited. I'm having a conversation with area mortgage lender and guru Keith Hoffman of Draper and Kramer. How you doing today, Keith?
I'm doing well. I'm doing well. How about yourself?
Living the dream, as I always say.
It's good to be us. You know that?
Absolutely. If I couldn't be anybody but us, I don't know who I'd be. Why don't you take a few minutes right now just to introduce yourself, what you do, how long you've been in the industry and so forth.
Sure. I'm a mortgage lender. I'm a mortgage banker. So I was one of the previous owners of First Advantage Mortgage. We sold out to Draper and Kramer Mortgage about 11 years ago. It's been a very, very good synergy between the two companies. I said 30 years almost I've been in the company, in the business. And, I've been really enjoy it. I'm really involved with it. And all I do is originate loans. So that's a good thing.
Yeah. Oh, absolutely. So being in business, as long as you have, Keith, I'm sure you've seen a lot of different scenarios, a lot of ups and downs in the industry, haven't you?
It is ridiculous with the amount of ups and downs that we've seen. We went into looking at these home values going absolutely horrible, going down. Banks did not want to foreclose on a lot of properties because that would have crashed the market. That was 2009 or so. Since then, it's rebounded. Interest rates are very good right now. They're probably the lowest or part of the lowest that I've seen in my history of lending, which is great.
It is, and the low interest rates. I tell you what, that's something my clients are so excited about, and some of them have found homes, and others are waiting for that right home to come on the market. That's a little bit of what I want to talk to you about today. One thing I find surprising is, well, not really, because I was going to say surprising that people are under the assumption that the real estate market is dead right now. However, if they're not in it like we are every single day, they don't know. I've done several videos letting people know that a lot of homes being bought and sold currently in the last couple months, even in the middle of the COVID-19 pandemic that we're in. What are you seeing on your end there, Keith?
Mortgages right now, we've seen a lot of refinances. But when it comes to the purchases, it seems like a lot of these homes that are on the market at a fair value, and it's for a short amount of time. So therefore, our borrowers are really having to jump on it and really get into it right away. That's why we prepare well ahead of time with documentation if needed, total pre-approvals, credit reports. So that way when they go in, they're going to be ready to buy. And I think that's a real important thing that we've seen.
Yeah, absolutely. I want to take a moment here, and forgive me, I'm new to this technology. I'm going to try to share a screen here to share with you and the viewers. This one here, can you see that on your end, Keith?
I can, yes.
Yeah, so the impact of COVID-19 in the real estate showings. The blue line are showings from 2019, and the gold line is the 2020. As you see, it's right beginning of March, things just kind of bottom dropped out. When the first news came out about COVID-19, there was a lot of fear, not only in the real estate market, just in life itself.
Sure.
But since then, you see we're back to the levels that we were of showings last year at this time, even a little bit higher in some areas, which I find fascinating. For me, myself, what I've noticed, and I've talked to other realtors too, once we started getting to the end of April, and people started kind of feeling more comfortable going out, seeing homes or putting their homes on the market, realizing that if done properly with precautions, they can move ahead with their life and their plans of buying and selling a home.
Yeah. What I've seen is a lot of this has really been pushed by two things. One is interest rates are so low. I mean, when you can get a 30-year fixed at 3%, you're going to want to move and take advantage of that. And then I think the other thing is with more homes going on the market, being able to break out of this COVID situation, you're able to show more homes in a little better manner, and therefore you're getting the buyers out there to really buy.
Yeah, absolutely. And one thing I've noticed, which may be surprising to some people, is I've been involved in several multiple offer situations in the last few weeks, which that's kind of gives you an example of the amount of buyers that are out there right now.
Yeah. And there's a lot of them. I mean, there really are. I've been doing a lot of pre-approvals for people because they want to be prepared. And they're, some of them are looking at properties saying that maybe September they're going to buy, and then turn around and they buy something right now because they found what they want and the interest rates fit their needs and the payments are right where they want them to be.
Sure, absolutely. I want to share one more item with you and the viewers. Let's see here. And can you see that one with
Yes. Yes, absolutely.
the charts there? So let me pull that in front so I'm not looking off to the side. There we go. So even though there have been a kind of influx of homes coming on the market, we're still in a low in inventory compared to last year. So even though there's an increase compared to last year at this time, or a typical spring market, we're below. As you can see, this is total active inventory around town. I mean, here's Downers Grove, minus 20% compared to last year. Darien, minus 30%. So that's one of the other reasons why we're seeing the multiple offer situations. And I tell my clients it's so important, have your pre-approval in hand and ready to go, because if you're competing against other buyers, you have to have all your ducks in a row. And
Right.
Here's something, and we'll go back to our screen to show people is, let's see here. Here's under contract between May 10th and June 10th, 2019 versus 2020. In Downers Grove, we have a 40% increase of homes that have gone under contract over last year. That kind of shows the really good real estate activity, which is also keeping home values steady, or if not increasing.
Yeah. One of the things that I really found is that a lot of people have gone into forbearance. Forbearance is when they don't have to make the payments. They take that, put it at the end of the mortgage. Because of this COVID, a lot of them are automatically putting you in, whether you need it or not. And unfortunately, that happens. But on the other hand, these people are still making their payments. So it's not a problem to do a mortgage if somebody's in forbearance. And that was one of the biggest concerns people have, is when they go to buy and sell, what are they going to do?
Mm-hmm. Oh, wow. That's a great point. I did not know that mortgage companies and banks were putting people into forbearance automatically during this point.
Yeah, I've got somebody that I'm doing a mortgage with now, and they said they're in forbearance. And I said, but your credit report shows everything is correct, and it's not in forbearance. So he just had to call the company, and they just took him out of it, and it didn't make any difference.
Mm-hmm.
I have statistics. Almost 9% of the mortgage business right now, the people making their payments, are in forbearance.
Wow.
That's a lot. Now it's down a little. Last week it was 8.9. The week before it was 8.9. Then last week was 8.8. So yes, that's getting a little better. I don't know whether people are actually going back to work, getting jobs, getting paid, but that's coming down a little. But that initial number seems to be pretty high.
Yeah, I'm very surprised about those high numbers. And I don't know if you have the answer to this or not, but some of the information I heard, that if somebody's considering forbearance, they should contact their whoever's holding their loan to really know the terms of that forbearance. Some of them will push those payments to the backside of their loan, and
Right.
some of them will require that amount of forbearance to be paid after the forbearance is over in full.
Right. So most of the time it's at the end, but you're right. They definitely need to check with their lender, see what the terms are.
Great.
Yeah.
So, hey, I got a question for you. So, since interest rates are low, and there are especially a lot of first-time home buyers not familiar with what they have to get together to get pre-approved, what do you recommend to people listening right now to get an order in place when they call you so they do get pre-approved for the home that they want to buy?
Sure. Well, it's they changed the laws. As a lender, I can't require them to furnish me the W-2s, pay stubs, bank statements ahead of time. That is needed for the mortgage itself. But most of the time in discussions, that helps a lot to give me the information that I need. Bank statements for 2 months, any finances that they're going to be using for 2 months. W-2s and pay stubs, W-2s and tax returns for the last 2 years, and pay stubs for the last 30 days. I always discuss with my buyers, how are you going to be paying for this? Are you going to get a gift? Are you using a retirement account? Are you taking it out? So we really just need to look at all of those. But usually what we do is W-2s and pay stubs for the last 2 years, bank statements for 2 months, and pay stubs for 30 days. So that's pretty much it. Obviously, if they've had a bankruptcy or foreclosure, we'll need that documentation. If they're divorced, many times we'll need the divorce decree if they have children. Mm-hmm. So those are the kind of things that we look at.
Great information. And though they're not required to present that information or those documents to you up front. It's a good idea to have that, because once they in contract, an executed contract to buy that home, an agreement, they have 10 business days to have a formal application.
Right.
To really move that process along, it's good to have that up front, isn't it?
Well, and you really need it these days, because obviously when you present an offer, the seller is going to want to know, do you have a pre-qualified buyer for that property? The business of mortgages right now is extremely busy, and it's taking a little longer than it used to. We used to be able to do a loan in whatever, it's a little 7 to 15 days. Typically 30 days is what's happening. But the appraisers are really busy because they're doing both refinances and purchases. The whole pipeline process is a little behind, but yet it's getting better. Like for our instance, our company did $1.5 billion in 2 months.
Wow.
Now that compares to $3 billion for our entire year last year. So when you look at these numbers, you can see, and we're not the only mortgage company out there, although we are the best, but
of course.
Yeah. But I mean, at this point right now, the whole industry is a little slower. So, when you're putting in an offer, I'm going to suggest that you don't do a 30-day unless you absolutely have to. And we can get it done in 30 days, but you like to give it 45 days if you can. But the pre-approval piece is the key to everything. The toughest part, I think, is self-employed, because I'm not required to have the documentation of taxes. But yet when you have a self-employed person, you really need to look at those schedules and income, because people just say, yeah, I make $150,000. Well, when you look at the taxes, it's 85, but by the time they get done with everything. So,
sure.
Yeah.
And fantastic. That was great information. I just lost my train of thought. A great question for you, Keith. And I totally lost it. I got it. So, yeah, where I'm finding the delays on my end is with the appraisals. Even though, like you said, they are getting better. And a couple instances, I've had them waive the appraisal or just do a desktop appraisal. And I'm guessing that's number one, to minimize the contact inside the home and to maybe speed the process along. I just was at one of our listings earlier this week to meet the appraiser there. And she said that, boy, she just has call after call to go out. And, the appraisal itself process when they're at the home isn't that long, but most likely under 30 minutes. The time consuming part is when they get back and they have to do a report for each and every one of those appraisals.
Right. Well, they're responsible for all the information in there. And
Mm-hmm.
so they want to make sure it's accurate and get that done. Yeah, I mean, the appraisal, I think, is the toughest part right now. And, wherever we're going to go with this, we put in an appraisal request right away. So that way we don't have any issues. We also put in the contract because the appraiser needs to know how much he paid for it, and are there any, compensations? Are there any closing cost credits and things like that?
Hmm.
But yeah, I mean, they're speeding up a little, but they're definitely pushing things behind a little, I think.
Yeah.
Yeah.
So I know you don't have a crystal ball, otherwise you might be in a totally different industry. Uh, but in your experience and what you're hearing out there, uh, where do you feel the interest rates may be going, throughout the rest of this year?
Well, it's funny because I just broke my crystal ball by accident. And so, but before I did that, I actually looked at it, and interest rates, I think, are going to stay pretty stable right now. They've been going up and down a little. 2 months ago, they were 2.75% for a 30-year fixed. They went to about 3.25, 3 3/8, and now they're back down to 3%. The Feds really didn't do anything. They meet, I think 8 times a year. They said things are going to be stable. They're not going to be raising rates till 2022, which is very good. Now, the issue when you get into the stock market, bond traders are the same as, you know, uh, traders, in the market. So when the stock market goes really high, the bond market, they're taking money out of it, which is forcing interest rates higher. They're
Hmm.
willing to sell it. The Feds are still the number one purchaser of mortgages. So when that happens, things are going to stay pretty stable right now. So I think, within the next year, we should see basic rates within a quarter of a point, either way at 3. The only thing that concerns me is the elections. Whenever we go into elections, it's always a problem. So
Sure, that could always change everything.
yeah.
3%, my gosh, that's almost like free money. I remember, I might be aging myself here when Lori and I first started looking at homes, it was at 13%.
Oh, listen, that's nothing. Mine was 18% when I bought my first house.
Oh,
And, the only thing that was salvation was I assumed a VA loan at 14%, and they gave me a second mortgage at 11. And it
wow.
was great,
Yeah.
I
I
felt
remember
like I was a king.
sure. I remember the first time we refinanced was at 8%, and we were in heaven. We're doing tap dances everywhere.
I know.
So,
It's really funny, or not funny, but it's ironic that right now with interest rates as low as they are, people can refinance into a shorter term rate and still keep the payments pretty close.
mhm.
I'm working with somebody right now. They've been in the house for a while. They've refinanced already one time, but they've been in it 12 years. And the problem with it is if you go to a 30-year, you're back to 30 years.
Sure.
We're going to look at a 15-year, so they're not losing a lot, and we can amortize it over 12, and they're still saving $350 a month.
That's
So,
great.
that a lot of people are looking at that, and whenever I'm working with my customers, I always ask, what is the goal here? Is it to reduce the payment, reduce the term of the loan, combination of the two? What is it?
Hmm. Yeah,
Yeah.
great information. That's favorable news for the real estate industry. Having if the interest rates do stay stable for a while, on our end, we're expecting kind of a late increase, late spring market, where usually the homes that coming on the market are March, where I show the graph was dipping, and what we've seen May, and maybe even continue on through July, where people will be starting to feel comfortable in putting their homes on the market. So this could end up being a very interesting real estate year. That's one of the things that I love about this industry. Every single year is a little bit different and keeps me on my toes.
Well, every little bit helps. Fannie Mae and Freddie Mac have two little different guidelines, even though they're basically the same. So when we underwrite something, sometimes I'll ask for 1-year tax returns because that's what they require. When I
Hmm.
put it through, sometimes it's 2 years. So it really depends on the number that we get and the information that we get back. You were talking about appraisals. Property inspection waivers are big now. That instead of paying the $400 or so for the appraisal, it's $75, and the computer is going to tell us that they believe the property is worth what they're paying for it.
Okay.
So that's a great thing.
Well, Keith, it's been a pleasure talking with you today, real estate and mortgages. I've enjoyed over the years working with you. We've done, quite a few deals together. And one thing I know is when I hand off one of my clients to you to take care of their mortgage, it's they're well taken care of. So I truly appreciate your professionalism and your service.
Well, I really appreciate that too. And it's always great to work with you. The people that I've worked with, your customers, have all absolutely loved you. You know, they love what you do, how you do it. And that's a big credit to you. So it's great to work together.
Yeah. Well, I think one thing we have in common, and I think, you touched on this last time we met, I think what the Rotary meeting is, we both, our main objective is to help people. We love helping people achieve their dreams in buying and selling a homes. And when you put your clients first above everything else, only good things can come out of it.
Absolutely. Absolutely. And then, the customer service as you're going through it, everybody has a little different thought process of what customer service is. But if we do the same things over and over that are right, then most of the time they're happy.
Yep, you got it. Well, Keith, you have a wonderful day. Thanks again for joining us. This is Slav Polinsky, Slav Polinsky Homes. Make it a great day.